Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, August 25th. It's coming up on 6:30 as I'm starting the video, running a little bit late here. As always, please run the video at 1.25x for maximum efficiency. Taking a quick look at markets, mostly flat across the board. Gold is down about 7/10. That's the only thing that I really saw that was jumping out. Over on macro this morning, we've got durable goods. That's always a good one to watch. We've got oil inventories at 10:30. We've got the FOAMC Mary Daly speaking this afternoon, and we've got a 5-year bond auction. I don't know if you were watching yesterday. There was a 2-year auction, and the bond commentators said it was one of the best, like, in history. There's just so much liquidity out there. They're just getting this short-term paper kind of stuff. So really strong. The 5-year, we've got the 5-year today and the 7-year tomorrow. Those are less popular maturities, I take it, or from what I understand. So we'll see if those have the same kind of reception as the 2-year. Over on the earnings front, the only one I saw this morning that got my interest was Dick's Sporting Goods. They report before the bell. But then this afternoon, there's quite a few marquee names. We've got Salesforce, CRM, that just recently broke out from a range. So they report after the bell. We've got Snowflake, Ulta, Splunk, which I'll show you the chart on. It's at a very interesting spot. Autodesk, and then retailer Williams-Sonoma. So those may interest you after the bell. So let's dive into it. 10-year bond yields. Remember, we were down here testing the lows. We rocketed higher. This was the reopening trade, back in gear. And then we got the big head fake last week with China growth fears and COVID fears. And that knocked down that reopening trade. It knocked down a lot of stuff, tech included. But commodities and the reopening took most of the hits. And then we spent some time just down here at about 1.25%. And now we're making a run back towards this 1.3% bond yield level. And I really have that marked as a kind of like a demarcation line for yields that above will favor the cyclicals, the banks, the industrials, the reopening names. And, I think we're in this kind of like this Goldilocks area, that if bond yields hang out, between 1.3 and 1.4%, I think everything is going to work as long as we don't drop down or spend a lot of time down here, which kind of is a drag on it kind of speaks to growth outlook, if you will. When bond yields are falling, that's going to be a drag on cyclicals. But as long as it's up here and not racing to the upside, remember, racing to the upside, or if TLT starts falling quickly, that's going to probably be a drag on the bubble stocks, real high valuation tech, the ARC complex, if you will. So keep those relationships in mind, and I've kind of got them right here for you. So we're a little bit below 150 on TLT. That corresponds to about 1.3% on the bond yields. So I think this is a nice little pivot point if you prefer to watch TLT instead of the bond yields themselves. But obviously, if bond yields are rising, TLT will be falling. US dollar down a little bit. So now, after this head fake breakout, we're operating really range bound between about 92.2 and 93.45. So in this range, I doubt you'll see a lot of dramatic moves. If the dollar continues to fall down towards this level, that's going to be positive for commodities. Actually, we've got the scenarios over here that you can look at. But falling dollar is going to help the commodity complex. And we've seen that. We've seen a dramatic bounce in oil. We've seen a dramatic bounce in copper. Really all the base metals, all the things that got crushed, aluminum last week, those names have really bounced off of those levels. So that's where we are on the dollar. And I want to remind anybody that's new here, if you want to register for all my content, you can just pause the video and write this stuff down. There will be a link in the video where you can go to the blog site and drop in your email. That way you'll register for all my content morning, noon, and night. Whenever I send something out, you will get it. So really glad you're here. I hope you benefit from the conversation and the levels that I'm going to point out. VIX continues below 18. I would use that as your more or less your pivot point, where anything below 18 is constructive for equities. You see a break back above 18, I would view that as a yellow flag, and anything above 20, like we saw last week, is a red flag. You'll see corrective activity if we see a break above 20 on the VIX. So that's a nice thing that you can easily put in your platform and have it visible during the day, and just kind of have it there. Keep an eye on it. Is it stable? Is it rising? Is it falling? Etc. But I think 18 is a great pivot point. I wanted to show you the oscillators just because it's something that we found to be very, very useful. Last week, we tagged down at this oversold level, and you can see just in the last couple of days the dramatic bounce that we've had. We went from 19 down to minus 60 last week, and we've bounced all the way back up into this 10 area. This is for the NYSE. This is for the NASDAQ. We're up at 20. So, I mean, if this rally continues, through the end of the week, it's plausible that we could run up here to overbought just that fast. And we've seen other instances of that in the past. Here was just a while back that we got oversold, and this then made a snap move right back up towards positive 60. So we'll keep an eye on that. Here in the middle, there's nothing to do. It's not predictive in any way, just something to monitor. Here's our stocks over 50. We took a dip down in the mid 30s last week, and now we're back up in the 52 area. If, and this is a big if the reopening, industrials, cyclicals continue to do well, I would imagine that this percentage over 50 will continue to rise. And that's kind of what we want to see in terms of expanding breadth, getting to the point where more participation in the rally. And so that's something to keep an eye on. And a lot of that is reflected here in the equal weight SPY, where we had this consolidation range. We broke out above 152, this trading range. We've been looking for a measured move up to 158. Where does that come from? Comes from this trading range being $6 from 146 to 152. Whenever you have a trading range and you break out, you add that trading range to get a ballpark measured move. So 6 added on to 152 is 158, and we're right here at the 155 level. And you can see that last week during that scare, we had lost the 8-day and the 20-day, came down to the 50 EMA, and have since seen that big bounce or recovery in the broad market indexes. Keep in mind that we still have these pesky bearish divergences. What is that? That means that price is at or near a high, but at lower momentum and lower RSI. That's never a perfectly healthy situation. It always leaves that air of doubt in your mind whether to trust this or not. And I'm of the camp that you keep these things in your mind, but it shouldn't keep you out of the trade, because what can easily happen is, let's say the advance continues and this grinds higher. What's going to happen is you'll get a breakout in RSI above trend, and you'll get the PPO momentum. You can see it's curling up here. If that curls up and then breaks out of this trend line, what you're basically doing there is negating that bearish divergence and more or less burning through that level, and then that would open the door for yet an even bigger advance. So moving on to the 2-hour, here was the tag of 436 that we've talked about in earlier videos. We've rocketed higher. We've recaptured not only the lower trend channel, but the midpoint of the channel. And now we're at new highs and driving higher. I think for today that on the 2-hour time frame, 447 is a great pivot. That'll keep us, any kind of pullback will keep us above support and above the midpoint of the channel, which would keep things bullish. You drop below, and then you can see the levels here, 446, and then we've got a gap down here from 445 to 444. But anything above the midpoint of this channel, I think, keeps the bulls in control. Here's the blow up on the 30-minute, the big run up, and now we're more or less consolidating here between, let's just call it 447.50 and 448.50. So if you're an active trader, I think this 447.50, or even if you got a dip down to 447, I would be a buyer there on that weakness with a stop just below, and then count on either of these two levels holding. Of course, if you get a breakout above 448.50, I'd be a buyer there. All-time highs you got to buy. And so any break above the prior high, which is right here at 448.50, would be a buy, and then you can set your stop just below. Qs. Pretty soggy yesterday, really. I was trying to do some stuff. We'll look at the individual names, but was kind of disappointed across the board. but it's understandable. We've had a massive move here off the floor, and we've more or less been consolidating in this area here between 373 and let's call it 375. So in my view, anything above 373 is going to be bullish on these short-term time frames. You drop below 373, and then it's quite possible to get a backslide into 370 back here at this prior high. And you can see we've got this little gap here of unfinished business that would, be in the crosshairs if we drop below 370. But what I meant by the title of today's video, Market Muscle Memory, is that, going back in time, the last 3-4 months, any of these little micro dips, they step in so fast to buy those. I mean, we don't really get a true correction. And, now I think, CNBC and these other financial channels are harping on, it's been 190 days since we've had a 5% correction. It's been 200 days. Now I think we're up to 220 days since we've had a 5% correction. And my advice is ignore it, really, because we're trading level to level. When we see these levels, when and if they do, and we saw it back here and we were on top of it, that if the market begins to roll over, right, we will see it. We're on top of this every day. So I don't think that you should let these factoids of, we haven't seen a correction in so long, and quote, it's overdue, because that's nothing to trade on. If that is something that gets you scared, you're going to miss the upside. If that's something that scares you out. Same thing with the bearish divergences. Is it a yellow flag? Sure it is. There's plenty of stuff to worry about. Could Jay Powell say something Friday morning at 10 a.m. that blows up the market? Sure he could. I think those chances are low, but my point is there's always risks. And if you're watching the chart, you don't have to know exactly the reasons why. Like Jesse Livermore always says, what the dickens does it matter? Does it matter why we're going up, or does it matter why we're going down? The answer is no. We just have to be attuned to the levels and trade them as we see them. If something is breaking out to new highs, you got to buy. You can't be someone sitting there trying to short that, saying, oh, we're overdue for a correction, and I think today is going to be the day when it happens. That's a losing trade. The trend is your friend. Stay with it until there's a reason to get out. So, getting back to the charts, not to get off on a rant, I think today you get a break above 375, you stay long and see where it goes. You get a break below 373, I think you can take that as an active short. Why? Because of this fast run up here from 370 to 373. Very little trading. So there's not a lot of technical support below 373. And, as we go forward, and if that level holds, what you'll see is these volume over price bars above 373 will grow like they did down here, and then there's going to be a void. So in the future, if and when we ever break 373, that's when you see a fast move down to 370 or even down to fill this gap. So you've got the levels there if you want to actively trade the Qs. I've been very pleased with IWM. If you actually look at the last few days, IWM has actually been outperforming, and as the cyclicals, the cyclical trade refires, and we're coming up into some interesting areas. Why? Because whereas back in this area, we had a lot of congestion. We had technical resistance levels. We had the declining 50 EMA on the daily chart. And then we've got this, I'll call it a wall at 224. So down here, this was the easy part, getting a bounce off of this range low down here, and now we've impulsively bounced. What was interesting about yesterday, and what makes me hopeful that IWM can keep going, is we were able to take out this gold EMA. The 200-day EMA on the 2-hour chart is the same as the 50 EMA on the daily chart. So we know that reclaiming important moving averages is important to our process. So we reclaimed a very important level yesterday, which is the 50 EMA on the daily chart. Now the next challenge will be this 222.50 level. If price can pop that, then we have an open path to 224. And what I'd like you to do, and we've talked about this for a while, even if you have not been involved in all of this mess and chop and bounces and all that kind of stuff, that's fine. Alarm 224 in your system. It's a very important level. And if we have a breakout there, then I think that opens the door to the upper half of the big trading range. And that would take us back up towards 234 on a longer time frame chart, which would be, quote, the top of the box. So if you have not been involved, alarm 224, and then buy that on the breakout. And here it is on the 30-minute chart. There have been some other gaps down in here. I chose to leave this one on just for reference purposes. We broke into the box yesterday morning, pulled back, tested the bottom, and then drove higher for the balance of the day. And I may have misspoke here. The level here at 221 is a reference level. Probably couldn't get that resolution on the 2-hour chart, but here this morning, I think as long as it holds 221.50, the door is open to that 224. You can see that this range here, 221.50 to 224, was actually a trading range in and of itself. So using our TA tenants, you recapture the bottom of the box from below. That makes the top of the box the target. It's the same thing in reverse from above. Remember, you break out, you come back into to a prior trading range from above, then your target becomes the bottom of the box on that move. So since we're coming from below, as we've recaptured these levels, now above 221.50, my technical target is 224. Moving on to FATMAAN. Frustrating day yesterday on Facebook. We had a big opening bar. This is the big one. We're going for 373 for the gap fill, and we hit this level here at 368, and it just didn't do anything. I'm long a few calls for Friday. I'm not saying today's a make or break, but I'm not going to be able to just sit there, forever wishing and hoping. So I'm looking for a breakout today for a potential run and a gap fill. If you're not in it, I think you can do one of two things. In fact, you should do one of two things. Either wait for the breakout at 368 and get long and look for 373 gap fill, or if things are soggy this morning and you get a pullback to 364, that would be a good place to go long. Why? Reject, 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 recapture. So you've got good support below. That would be a place that I would take a long at 364 with a stop just below. And then your first target will be 368 and then 373. But what you should do there, if you do that, is buy a little extra time. I wouldn't do that for Friday unless you're just looking for a little bounce. I would go out a week. Not to this Friday, but next Friday. Give yourself some time for that gap fill. Apple, frustrating. I wasn't in it. Actually, I take that back. I was in it from the other day. But we had a big opening bar, and then they faded it the rest of the day. Back here to 149.50. I think that's a great pivot point for today. As long as 149.50 holds, it's fine. The door's open to 151 and then to all-time highs if it can break out. If you lose 149.50, you could see, a backslide into 148.50. But right here, you can see that's been good support here for the last several days on the 1-hour chart. Tesla. Looks a lot like a bull flag right here to me. Impulsive move higher. Reached up. You can see that little tail there. I would call that gap filled. Maybe it's a few pennies shy. I'd have to really zoom down. But regardless, you can see that the flag is forming between 705 and 710. So if you want to be actively trading Tesla and you get a breakout above 710, you can be involved and look for a move to 720 at this gap, and with any luck, a gap fill up to 735. And you can see that the measured move going down here from 675 up to 710, that's $35, and $35 on to 705 puts you at 740. So on a measured move basis, breakout above 710 would target 740, and that would clear out a lot of this congestion and open the door for higher prices if Tesla is going to get going. Microsoft got the big impulsive move over 300. Now it's consolidating here between 305 and 302. I did move this support line down $1. I had it at 303 yesterday, but since it spent so much time here and didn't look like it really wanted to break down, I moved that support line down. So this looks a lot like a flag. Big move higher, consolidation. Just like any other flag, you can try to go long at the bottom at 302, or you can wait for the breakout of 305 to get long. I think Microsoft is going higher. The chart says it wants to. Of course, if there's a downdraft and it loses 302, I'd expect it to come back here, maybe get some support at 300, but from a purely technical basis, probably going to come down here to 298 and test this gap. So I think it's going to be important for Microsoft to hold 302. If you're not afraid to buy some time, I think buying 302 with a tight stop below would be a nice entry point. But then if it loses 302, you got to just exit right away because, like I said, probably going to backslide further. Amazon, nice little day yesterday. Not dramatic, but it's flirting with this 3,300. So it's right on a pivot point. You can see that here at the bottom of this trading range. And so if it can hold 3,300, the technical target is this 33.75 level. That is the top of this consolidation box and entry into this big gap. So first move would be to come up to the top of the range, and then if strength ensues, you get a clean breakout into the gap. So 3,300 is a really nice level to key off of today. Above, you can be long, and if you want to mess around with a short, you can be short below with a target of 3,250. Google remains strong, just consolidating. There's this big opening candle yesterday, and then just consolidation the rest of the day. I'm going to need to kind of rescale this chart, but I think just in general terms here, what is that? I'm going to call it 28.25. Anything above 28.25 here is going to be bullish. Really anything above 28.15 is going to be bullish. You probably don't want to watch that $10 disappear, but I mean, when you're on a $2,800 stock, $10 is, nothing. But looks a lot like a flag to me. And any kind of breakout to new highs, if you want to be involved, get long. All-time highs you got to buy. So Google continues to look really, really strong. Netflix, we've been talking about this range. We've filled the range. We've got overhead resistance at 560. So anything above 552.50, you can be long, looking for 560. But then for longer term players, anything above 560, you want to be long for a $90 measured move coming out of a year-long consolidation. So 560 would be an important level to alarm in your system if you were interested in Netflix at all. Semiconductors made a tag of 265 yesterday and then kind of backed off from it. You really need 265 to get higher prices. And when it's in this range between 262 and 265, I don't think there's much to do right in here. If you got to pull back to 262, I would buy it. That was a previous breakout level. If you get a breakout above 265, I'd be a buyer there and look for 268-ish. That would be a good positive sign for technology and the markets in general when you've got a risk-on asset class moving higher like semis. I think that would be really constructive. If you got to break above 265, I'd be a buyer there. Here's that SPLK chart. You can see here that 152.50 was an important level. You could probably use your imagination to envision a inverse head and shoulders. See that? I don't have it drawn in. So a breakout here above 152.50 would project, way up in here somewhere. I don't have it drawn in, but there's a big gap here between, say, 205 and 185. So there's a $20 gap up here. But first things first, we've got earnings after the bell. If you're an active trader, there may be an opportunity this morning. If there's a breakout, you may see this thing run into the earnings print. And so you might be able to catch, a little intraday runner here if the market is strong and people think that earnings are going to, blow it out of the water. You may see a little or a run up this morning. So if you're interested in that type of a trade, set yourself an alarm at yesterday's close. And then this morning, if that thing goes off and you watch a 5-minute chart, you could possibly, get a runner for the day. We were talking about KWEB, the China ETF chart. Yesterday, remember, we had tried a long, we got stopped out. Of course, yesterday it was up 10% or something. So really regret not being in that trade. But anyways, BABA weekly. There's an important level on the weekly chart right here at 171. Just to give some clarity to the chart, I've brought this back to like 4 years. But if you zoom it back out to the history of all of BABA's trading, which has been 7 or 8 years, you'll see that 170 has been an important line through the years. And the reason I mention it is if you were interested in BABA and if you were interested in giving it some time and we get a weekly close this week above like this 171 area, and you're the type of trader that can give it some time, you could go out in time and get yourself either some calls that are relatively out of the money, like something in January, let's say a January 200, right? Something out there that's not going to be super duper expensive. But if this thing recaptures and gathers itself, that would have a tremendous amount of upside. You can see that this thing's been overcut in half. Here we were at, let's just call it 320, and we got cut down to 160, so that's 50% fire sale. And now we're starting what possibly could be an upcycle. And like we said before, even a 38% bounce off of this kind of a down move would put you well above 200. So depending on how you view that policy risk, it's either a speculative trade or it's a bargain, probably one or the other in your mind. But and of course, you can always go back to KWeb and play the basket if you want. I want to bring this chart to your attention. Some of you may already be familiar with it, already be trading with it. It's the UPST, this upstart. Volatile stock is in this flag formation, starting to emerge from that flag above 210. Projected move on a measured move basis is up towards 280, 290. I bring that to your attention. One, it's been a good trading vehicle for a number of the guys in the trading room. And if you're an active trader and you're not aware of it, put this one on your radar screen. If you are more of a a position swing trader, daily time frame kind of guy, if you got a pullback into 210 that held, I like that long. You can see it's above the 8-day. All the EMAs are bullishly stacked. If you got a pull into 210 that held, I think you could get some calls with a little bit of duration on it and see if that holds. And if the market and the stock cooperate, you get that little back touch of 210 and then a bounce higher. So I like a long there against 210. And then yesterday, if you have been with us a while, we said to alarm 55 on DraftKings. We said that here is actually when it was threatening that level, and it promptly got rejected, but the alarm stayed in place, and yesterday we got the breakout. And if you had that in your system and were able to capture it, kudos to you. A few people in the room did that and did real well with it. Probably still have it. I'd put it on the radar. If you get any weakness, especially anything pulling back into 55, I'd be a buyer there. And then put your stop just below. So longer video. I hope you appreciated the levels and the details. I hope the levels help you in your trading, give you more objective entries with good places to put your stop, and I hope it's helping you in your trading. Let's see what they do with it today. Hope you guys have a great day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.